My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends. I'm just trying to save you some money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. On days like today, doesn't it feel like the market has rallied so hard that it just might be due for a correction? Dow dipping 65 points, S&P declining 0.63%, NASDAQ losing 1.21%. Believe it or not, it was actually worse at one point. It was a pretty awful day for almost all stocks, especially the growth stocks. And that's actually somewhat logical, as the stock market is wildly overbought. The growth stocks have been red hot, and we're telling club members, that members of the CNBC Investing Club, you have to be careful here. You can only buy stocks of good companies with good fundamentals that are getting crushed. Good, true growth stocks can be impervious to an even ugly day. When you see Lululemon surging $33 on a tremendous quarter, you know the market's still eager for what is known as secular growth, which is what they have. Secular growth being the kind that doesn't need an economic tailwind, won't be hurt by the Fed, theoretically. At the same time, if you do fear a Fed-mandated slowdown or recession, as so many do right now, then you have to avoid the cyclicals, the stocks that are hostage to the economy, because it might be too late now that the Fed's poised to slam the brakes on the business cycle. Spot the secular growth stories, the real one. Steer clear of the cyclicals. Sounds easy, right? Not so fast. These days, everybody wants to paint their stock as a secular growth name, especially in times of turmoil, because that means their stock will still go up even if the Fed breaks. But wait a second. What executive would want their business to be branded as a cyclical when so many money managers think we're reaching the end of the cycle and they only want growth? Now, this wasn't always the case, by the way. In the old days, most companies just accepted their lot. You never heard a steel or aluminum maker trying to make the case that they're no longer hostage to the slings and arrows of the economy. A copper miner would never claim to be a secular growth play. An oil company would always accept that its fate was tied to the business cycle. Same goes for the chemical stocks, the paper companies. These were stocks that you bought when the economy was about to take off, and then you hang on until they added too much capacity or demand waned, causing price to collapse. Your goal was to get out in some sort of a game of chicken before that occurred. And that's what defines a cyclical stock. Great demand causes a shortage of supply, which then leads to more production, which in turn leads to a supply glut, so the whole edifice collapses under its weight. And that's what so many are worried about. Don't cry for the cyclicals, though. You can make fortunes of these things on the way up, provided you know when to jump off. But if you don't jump off at the right time, the losses can be calamitous. So cyclical has become a dirty word for CEOs. They all want that secular halo, and it can be hard to tell whether or not they deserve it. So case in point, let's just dissect one that I interviewed this morning, Micron. Really tough. When I got in this business 4 decades ago, there were few non-mineral stocks that had as much cyclicality as the stock of Micron. It made pure commodity semiconductors, DRAMs, the most simple of chips, and it competed against a bunch of low-cost producers in Asia. During that period, Micron tended to be either one of the best performers in the S&P 500 or one of the worst, very little middle ground, and the bad times are a lot more frequent than the good. Over time, though, Micron decided to take control of its own destiny, moving into flash memory, then building a far better, more intricate kind of DRAM that you can use in everything from cell phones to PCs, but to data centers and to cars. Yet no matter what the company does, and that includes reporting an excellent set of numbers last night, it's still tagged as the same old cyclical Micron, and it seems to get discovered as such on days like today. Now, I think it's wrong. The new Micron is much better than that. It's the low-cost and most competitive producer when it comes to quality. Its chips are used in the best growth areas. Nonetheless, I respect what the market is saying. After the stock soared in response, terrific beat-and-raise quarter, its 4-point gain melted away for fear that we'd see the same old commodity semi-cycle. In other words, people didn't care about my view that it might be secular now. They said it's just cyclical. And with Micron and its competitors building too much capacity to meet demand, ultimately causing prices for these chips to collapse. Now, CEO Sanjay Mehrotra made it easy to turn negative because he said there was weakness in consumer notebooks. I wanted to ignore it because they have so many other parts of their business now. Doesn't matter. The bears seized it, and they beat the stock to a pulp, Sure enough, Micron finished the day down 3.5%. So it starts the day as a secular grower and finishes the day as a cyclical bust. We see this dynamic all over the map right now. For years, the oils were the ultimate boom-bust stocks. When demand was off the charts and the oil prices were high, they'd ramp up production, only to sow the seeds of their own demise. New wells would come online, causing prices to collapse. The most recent bust extended from 2014 through a couple of years ago because the industry had zero discipline. Then out of nowhere, a fellow by the name of Rick Moncrief, CEO of Devon Energy, recent guest, by the way, on our Investing Club program, decided the boom-bust cycle had to stop. Rather than drilling like crazy, he devoted a huge percentage of Devon's earnings and cash flow to you, the shareholder, through a very generous variable dividend. The plan worked because the rest of the industry more or less got on board. Nobody wants to be the first producer to drill like crazy and ruin everything. Now Devon's practically an ATM, spitting out mid to high single-digit yield depending on the price of crude. Moncrief's taken his stock from the cyclical garbage pile and put it at the top of the secular cookie jar. Then there's a stock I really like called Deere. Yes, the ag company. And the agricultural cycle has always been boom-bust. There was no way for the world's largest farm equipment to escape it. It just was always hostage. But now farming's gotten high-tech. Deere building autonomous driving tractors, much easier than self-driving cars because there's no traffic in a cornfield. Sure, there's still hostage to food prices, but right now, those seem bent on going higher with a drought that could wipe out the Latin American soy crop and, of course, a war in Ukraine that could take out 13% of the world's calories. Of course, for every cyclical company that pulls off this secular transformation, there are also many others that fail. Now, see, I thought RH, the old Restoration Hardware, had escaped the boom-bust cycle because its wares are so spectacular. But last night, CEO Gary Friedman talked about how RH remains very sensitive to the broader economy and how the war in Ukraine has disturbed the psyche of the customer base who are now cutting back. I find that shocking. But it caused the stock to go down 50. You don't want that. Then there are the automakers. Classic cyclicals that have cratered this year because Wall Street worries the Fed rate hikes will make it harder for people to get financing. Doesn't help that the semiconductor shortage meant they never got to take full advantage of the boom over the last couple of years. But there's an exception. Tesla. You know why? That's the ultimate secular growth stock. That's why it's such an important one in the market. Finally, let me give you maybe the toughest one, Apple. Now, there's still plenty of analysts who believe Apple's hostage to its own cell phone release schedule, the ultimate cyclical boom and bust nightmare. Me, I think each phone represents an annuity stream with its own lifetime subscription value. Once Apple gets you, you forever have it because it's the best. Now, this stock's been straight up. If it goes down tomorrow, you'll see people blame me. Wait a second. You know my view. I say own it, don't trade it. But if you don't own it yet, it's just been up for day after day after day. It can cool off. Let me give you the bottom line. At this point in the business cycle, just about every company wants to be seen as a secular growth story. Approach them with skepticism, not too much like they did today in the NASDAQ, but some skepticism. Remember, not every cyclical caterpillar, and that I mean little c, not big C, can turn into a secular butterfly. Kate in Georgia. Kate.
Hi, Cramer. How are you?
I am good, Kate. How are you doing?
I'm great. Cramer, I wanted to extend my condolences to your friend who lost his dog. And,
yes,
you know, I respect everyone's grief timeline, but our shelters here are full, and we adopted a black German Shepherd, hands down. I mean, she's the salt of the earth.
I just
Best
love
decision
them.
Ever.
My rescue dogs are sleeping in the bed now because my wife got back from Florida. They should wait till I leave the bed. I mean, I love them, but they... Anyway, go ahead. Good.
So my question is regarding AbbVie, high-quality problem.
Oh, yeah.
I've got huge profits, and I feel like maybe it's time to take them.
Oh, well, I've got to tell you, Kate, you know, Jeff Marks and I, you can watch it at our 1020 meeting, we have been going back and forth for the club. He finally convinced me, let's just hang on to the rest because it does still yield 3.5. I think it's going to pull back. But you know what? This is a very good company that was underrated by Wall Street. Let's hold on to some, take profits in others if you have it like we did, okay? Do just what we did in the club. Jeff in Indiana. Jeff.
Booyah, Mr. Cramer. Thank you for taking my call.
Oh, thank you, Jeff. What's up?
Hey, my portfolio, I got a good chunk of Nucor steel, and it's had a great run this last year from 75 up to 157. And it's been bounced around 149 or so in this last week. Should I take a little profits here?
Okay, just like our previous call, we have a huge gain in Nucor for our investing club. We have sold a lot of it because we don't want to give it back. It is a growth cyclical is what we call it. So take some profits, but not all of it. Now, I know, look, there are plenty of things we do wrong in the investing club. So you just got two real good ones. I'd like to just talk about, look, there's some things we do wrong, too. Don't make it sound like that these were cherry-picked positive. But we do like to take profits when we have stocks that have some cyclicality or have just skyrocketed because we don't want to give the gains back. In this market, every single CEO wants his stock or her stock to be perceived as a secular growth story. I need you to be skeptical because not every caterpillar can turn into a butterfly. On Mad Money tonight, a classic growth stock, Paychex, has a glimmer of green on today's tape. So could the payroll processor continue to pay up for investors? I'm checking with the CEO. Then, after hours trading has become the Wild West, so should you jump in on the action? Let me give you some warnings. And then I've got the most exciting company in the market, which is Tellurian. I want you to be careful because it's such an exciting story, but it's only a $5 stock. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.